Welcome everyone to the Trade Findings and Adjustments for year 2020. My name is Kevin Hurley. I'll be hosting our Trade Findings and Adjustments for you today. Let's see here. This is the first one that I've had this year. So let me give a preview. Our goal is to obviously have some phenomenal returns using some spread trading strategies. I can still go back to some returns last year that I actually have open here. And just as an idea, what I'm trying to do, I'm trying to use something like, oh, where would I find it? Give me a quick second. I should already had it prepped and ready. I'm looking for some call positions. I will probably do a bunch of leap long calls this year. I might do call verticals, or I'm going to spend $4.60 to try to make 10. More importantly, I'm looking for call positions that can turn 18 into a $34 profit. 958, looking for a $19 profit. I can go through and show quite a few of these if I can keep going up here. I've got some prepped. Facebook. Again, some Facebook ones where literally I'm looking to hit a home run. $15.31 sitting at 27. I'll feel better at 31. $12.25 looking for a 24 exit point. I'm just looking at finding ways to have some ridiculous returns for 2020. That's what I'm here for. I want to get some really good returns on some positions that we can make some great money in. Most recently, I've been in Disney, so I'm kind of showing you some of my longer term positions that I'd like to be in. Hello, Maud. Are you able to hear me? Happy New Year to you too. As I'm taking a look, Disney, $13 I'm trying to turn into 27. 14 that I'd like to turn into 28. They're all still profitable. 11 and a half looking at obviously 22. So I'm just working on doing the best I can to truly find some good stocks with some good upside potential that I probably will be in and out of 2 or 3 times. Most recently, some of my best ones that I've had have been Baidu, a $4 return at a 300% return worth $16. I could probably run up and I could probably go up to some Apple ones as well that would just blow you away. Nothing like having a $27 position turn into 90. Or a $27.80 position turn into 112. Some $41 ones turning into $50. That's what I am truly looking for. Now, I'm going to present to you a couple things to look out for. If I was like everyone else, I could take a pretty small portfolio. Where's my small one? That I need to use to pay some taxes, right? And here we are, a $15,000 portfolio that's made $455 year to date. So if I was to just do some simple math for you, this is what you need to look out for. This is where you want to see an actual portfolio, right? 15,987 minus the 455 means it was worth 11,434 at the beginning of the year. You divide 4,555 divided by 11,423, and all of a sudden, 455 divided by 11,423 gives you a 39.87% return in 2 weeks. So then again, someone says, well, if you annualize that times 24, hey, we just had a 957% return on our portfolio. And he stops right now and he starts selling a bunch of $1,500 to $2,500 to $5,000 to $10,000 advisories, because annualized he has a 957% return, which all of you guys should say, you know what, Kevin, that's absolute bull crap. And you are absolutely correct. So what we're trying to do this year, this account will be shut down. I opened up a new account, a Hurley Trust account, and I've just initiated some positions. I'm looking at some positions that, one, can move me through the next 4 months. I unfortunately am doing that with Baidu. If I was setting up a portfolio, I would be looking at some January 2021 $155 Baidu Leap long calls. They are 12 months out there in time. I'm really looking at the China deal and the fact that Baidu has been down so long as an opportunity or a catalyst to really see these $15.14 calls probably go up to about $25, as Baidu by this June really easily could be at $180 to the $200 price range. So I initiated a couple Baidu calls, I think last Friday. I initiated some Facebook calls. Again, January 21, trying to work on this year. I went out to 2 calls at $250. And I also put in a couple Visa calls, which are my real winners right now, at $200. I have only spent about $9,000, about 20% of my portfolio. Right now I'm in international looking at a China deal. I'm on Facebook looking at their profits. I'm at Visa because Visa has not moved like I would have expected it to. And if the Chinese markets are opened up to Visa, credit, Apple, banks, there's some opportunity there. So I'm just starting out my portfolio. If I was looking at a trade for today, knowing I spent $10,000, knowing I might dollar cost average all of these, if they came out to if they lost half their value. If they lost half their value, I would be dollar cost averaging relatively quickly. If I was going to put a new position on today, there are 2 I'd be looking for. My first one is really pretty dirt cheap. I'd be looking at Ford. Ford's trading at $9.29 right now. If I was looking at an option spread or an option trade to be in, I would first check out January 21. I don't need any of these sitting right here. But if I was looking for a quick money maker for this year, I would probably start off with, so I'm looking at the $10 strike prices. And what I'm really looking for are the price and the delta, 58 cents and 84 cents. Let's see what the delta is on this one though. Delta is 0.39. I'll make 39 cents on the dollar, almost doubling my money there. On the $10 January 2020, 45-cent delta. Wow, that's a little shocking, but that just makes up my decision. My first trade I'd place for you guys would be 10 contracts, 84 cents. It's an $850 trade. Good till canceled. I'm previewing the order, and off I would go on that one. My other one would be Under Armour. Stock that's been beaten up last year. China could help this one out as well. It's obviously moving quite nicely. Again, I would be going out in time. I want to be relatively cheap on this. Looking one more time, $22.50. I could spend $3.10, get a delta of 0.53. If I went out to the 22.50 at 0.59, that's only 0.6 there. But it is higher. That's really, I got to be honest with you, I'm a little bit shocked. Higher delta kind of makes it a no-brainer. I'm going to start off with 5 contracts. I don't have the same conviction I do on Ford. Now, something was brought up to me today on some of what makes up my decision. And really that comes down to a little education I'm going to bring in for you on pivot points. For those who are not familiar, pivot points is just a high-low close. I usually run mine on 14-day periods, which means if I was going to set up a chart, let's go ahead and let's go from scratch. Stockcharts.com, put it on in here. I like to fill my chart to a 6-month period in time. Candlesticks are great. Let's make it a landscape to make it bigger. Price labels. Color vision impaired helps me out. It automatic reloads for me. My overlays, I find my pivot points hidden in about the middle of my overlays. My indicators, I use a Williams %R, which is a medium stochastics. I update my screen, and my chart is set up the way that I am interested in seeing it. Notice how we're running up to a first resistance level on a pivot point. I use my pivot points because it gives me a general idea where our growth is going to come on individual stocks and on our markets. Our market will probably have a bit of a trouble bumping into growth unless it comes from stellar earnings. Kevin, why did you use Ford? Why would I be looking at Ford? Sorry about this. Why would I be looking at Ford as a trade to start off your year, right? When I look at Ford, we have a pretty good support level at 922 for a pivot point. The last 14 days and through the last 30 days on the month, that's held. We have the 200-day. We have the 50-day right underneath it. And right up to the upside or high side, we've got $9.65. Why is that important? Well, that's about a 46-cent upside. On an 84-cent trade, it's nothing like getting 100% right out of the gate. Probably, though, I'd look to see Ford get back up to test the new highs at $10. $10, we would most likely be overbought on the Williams %R. We would probably be overbought or pretty close to it on the RSI. It has some great upside potential, and the setup tells me Ford's going to be on guidance through this next year, which should be better than last year. The trade sets up nicely for me. If I was going to take and look at Under Armour, another trade where if I'm looking at pivot points, I've got some pretty significant bounce off of the middle pivot point today. It broke through it, bounced off of the 50-day. I do have the 200-day, though, that could give me a problem. But I really like an opportunity up to 23.02 on the pivot point. I really like the opportunity at 24.45. It did trade at $28 not too long ago. There's a market setup or an opportunity for Under Armour that just strikes my fancy. And again, I do think this comes back down to the fact that if a Trade One China deal gets done and they get to work on fixing some of their internal problems, which they've announced, there's a lot of upside opportunity for Under Armour. Yeah, well, Kevin, they just had a pretty bad press release. I understand it. But it's a good company with good profit margins. That's a good opportunity. Now, I'm also looking at CVS. The problem with CVS right now, though, look at how everything's crunched up. If you look at CVS, and I'll get that question answered in just a second, that comment answered. And first earnings after, very correct. We should have some good opportunities with that. Good comment there, Rich. If you look at CVS, what do you notice about the pivot points? What do you notice about the pivot points right here? Very close. They're all stacked up, right? Look how wide they were last month. But now they're all stacked up, which makes sense because look at the range. If I was to take a pen, let's use black, right? Give me a pen color. We have a pretty narrow channel that we look like we just broke above, right? It looks like we're just breaking above an upside there. But when I look at the potential, we might just be to our first pivot point. Hey, we might get up to 75.92, the first resistance level. There's not a lot of growth there. In fact, in all honesty, even if we got up to the second pivot point at 77.55, it looks like we're going to need some earnings to break out of the CVS funk that it's in, right? So if I was looking to do an option trade on this, really my pivot points, my chart set up, tell me it's something that I'm going to have to be out in time a month or so for to wait for earnings. It tells me I'm not going to have too much upside opportunity most likely in between earnings and then, which means you have to take a peek at, hey, am I in it for 20% return? Well, on this little movement opportunity, you don't have a 20% opportunity here on your option. If you're going to do a bull call calendar, you need to look at setting your exit at a 7-8% return. You're probably looking at setting your exit at maybe getting just your first option month expiration on a call calendar, and then you're getting out of the trade. You need to look at your technicals to give you a rational understanding of what percentage return you should be looking at and that you should be looking for. It's amazing how many people just say, oh, just gonna do a 20% return. And they try to stick by that. When I can show on a chart that that's probably not what's available to you in the position. You probably don't have this, hey, I'm only trying to hit singles. You need to spend a little more time looking at the opportunity on your chart. So this year, I've brought $50,000 into a new account. It's a trust account. I still will probably, take some money out of it. I do have some Baidu calls, some Facebook calls, some Visa calls. Those are all first quarter plays. I'm probably missing some Disney calls that I would also have for first quarter. But part of the portfolio management needs to, I would suggest you would go back and take a look at last night's market view commentary, because I have a trade set up here, and where if you're going to follow along with some of these, I would probably suggest you do it with 20% of your portfolio or less. And part of that is because of the year that we have coming up. If we're looking at what we have in this year, it's an election year, it's tax selling. We probably need a correction or a quick bear market correction. It should be more volatile being an election year this year. And I think we'll have bigger drops as more profits need to be taken quicker from people that did not seem to cash in very much profit last year. So my goal for you this year is obviously to have a $50,000 portfolio. I'm obviously trying to double it. If I only get a 50% return, I'm not going to cry over spilled milk. But I'm taking a more realistic approach and a more realistic size portfolio that I think $50,000 is a bigger sum of money than the $27,500 I was farting around with last year. I would be adding these positions Under Armour and Ford. These are going to be my long-term, quote-unquote, core holdings, but I'm probably going to get in and out of them 3 or 4 times in these leap-long call positions throughout the year. If we have a good first quarter, I will most definitely take half of the positions off. Play with more of the house's money. If they go down, my plan is to dollar cost average them when they are only worth half the value of the longs. And I may do that 3 or 4 times. If I was going to follow an earnings event, like I'm looking at JP Morgan, I would probably be looking at an in the money bull call. If I was looking at a JP Morgan trade, which I can't believe how good their earnings were, to be honest with you, I'd be looking at a shorter term, probably a January 21. That's going to be 3 weeks out, 2 weeks out. Let's see if I could do a January 31. Do I have the ability to make the money? 39. $43, that's an interesting one right there. Let's look at our chart and let's see if JP Morgan offers that opportunity, right? Oh, come on. JP Morgan. 142.54. And it couldn't really hold the gains today. Although that was due to our stock market news today, huh? 35 is the downside, but it's right at that top point at 137.50. 137.50. It's an interesting trade. I don't know if I'm comfortable with it yet, but 139, I'm going to spend 135. 139, I'm going to spend 135. So we're looking at 140.35, but it can get up to 142.50. 140.35, 142.50. That actually is 100% return right there. More than 100% return. About 150. Let's work those numbers out really quickly. That's kind of an interesting, that's an interesting thought. To create a portfolio from scratch. Ford, I'll hit on that one. I'll fill it in as I put it in. I already said Under Armour. I've got Baidu. I've got Visa. I've got Facebook. And I'm looking at a JP Morgan short-term bull call. So if I was looking at this one, it really would be a 139, 143. 139, 143. January 31, 2020. It would be January 31, 2020. Debit of $1.35, which is also equal to your risk in the trade. Maximum return is $4, right? Difference in two strike prices. $4 minus 135, which equals $2.65. R1 pivot point though is 142.50 what? 142.50 54. So that would probably be my exit right about there. So we're looking at $3.50-ish, right? $3.74-ish. 39, 41, 42, $3.39. Kind of curious, wonder what I wonder what, oh, come on. I wonder what my snapshot analysis would be. If we ran up to price of 42.57, we'd have about $1,170 of profit. That's interesting. Ooh, that is really freaking tempting. I could really like this order. And all we're doing is following an earnings play. That's all we're doing is just following an earnings play. Very interesting. All right, Ida had a question. Please send a different cover, all the criteria stand for the charts, for example. So Ida, it is for free, and you will find this posted on my Hurley investment. I'm going to start marketing this out last week of January, in which case, for those that are not clients, it's going to be $99 a month, and I will still post all these, but I will post them 2 weeks later on my Hurley investment. These are going to be posted on Hurley Academy right after we get off with everyone. So pretty interesting. I'll be honest with you, I really like the setup here. Now, if I don't see the movement tomorrow on this position, I might not do it. It'll be interesting. It'll be really interesting to take a peek at. But I do like the setup today, which means this could probably be the spread trade I'd be in, doing nothing more than just following the market. It's up another dime after hours, so not a big movement. Could be a pretty interesting trade to make some good money on right out of the gates. So I'm kind of throwing a lot at you today. I will get this posted here tonight so you can have it before the market opens up tomorrow. But this is going to be this is what we're going to be doing. We're going to find these opportunities, and I think we'll have a lot of good opportunities through this first quarter in earnings. Earnings should be pretty good. It'll really come down to guidance. And I hope you guys have fun this year going through my trade findings and adjustments. For a couple of you that are here tonight, obviously you'll see some of these positions in your accounts. It's kind of what we do. It is okay if you'd like to copy these positions in your own accounts and follow along or do some of them. I think it's a good opportunity. Some of you might say, Kevin, I already got Ford shares or Under Armour or something like that. I've already got Baidu, but we're in June of 2020. So understand you are already here in some positions, and you're going to be okay. You're going to be okay. You don't need to you don't need to worry about it. You don't have to follow along with every single one. That's not what this idea is for. This advisory is to give you guys some ideas and really see what I'm doing. And from there, you guys can make your own decisions on when you want to get in and out. If you're going to follow along in a separate account, there are times to be greedy and there are times to take a profit. And it's really that simple. Baidu gave me a bit of a head fake today. I tried to see if I could call a bottom on a big drop down today, and then I freaked myself out. So I went from having some long calls and saying, you know what, I'll just turn that into protection for the shares. Those of us that are in long positions, we just kept them where they were at. So please don't think the market's easy. It's not. And I hope you enjoy following me along this year on our High Academy Advisory. It's going to be the Hurley Investments Academy Advisory. With that said, any questions that I maybe have not answered that I could go over with you? Are there any questions that I have not answered that relates to these trades that maybe I have not gone over with you that I should spend a little bit of time going over with you? I will fill in my other trades where I'm at, and I will I'll calculate what I have for you right here in my expectations. But potentially this could be 6 trades for you guys right out of the gates. All right, I don't see any questions coming in. I appreciate you being, ooh, there's a question snuck in just at the last moment. Put them up one more time. So right now I currently have Baidu January 21, 155 calls, which if you got in right now, you get in at a better price than I did. I've got Facebook January 21, 250 calls, which I'd get you by about 30 cents today. And I've got Visa calls to January 21, 200 calls that, I'm up $1.40-ish on today. So these are my three positions that I will put in on my chart all through January 21, trying to keep it in this year. New positions I'm going to be entering, the JP Morgan bull call. I'm going to put some Under Armour because it's bounced off of the 50, some Under Armour calls in there. And I'm probably only doing, in all honesty, how many do I have for Under Armour? I'm only doing 5. I'm only going to do 5 Under Armour. January 2021, I think what I had in there. Nope. I've got Under Armour January 2022 and Ford January 2022 in place. And both of those are in place because they had a better delta farther out in time, which kind of surprised me. I don't know if we can trust that theoretical data, but these are the ones I'm going to have. And again, I'll have it posted here in a couple hours. So you guys will have all of the positions in place before the market opens up tomorrow. So you'll have them. Some of you may even see them in, some of your accounts. Some of you, I do obviously trade some of these positions. You might already have some, but in all honesty, some of you will see these positions entered into your accounts today as well, so that you will see that I am obviously getting them in there and seeing how we end up with them. All right. Hey, guys, have a wonderful evening. I will be traveling on Thursday, so I will not have a Thursday trade findings and adjustments. But I would look again next Tuesday. I'll have them, and then Thursday they will be Tuesday evening and Thursday morning. Guys, I appreciate your time. Thank you for coming. Hopefully we'll have another fantastic year in our trade findings and adjustments, and we'll make a killing. You guys take care. Have a good night. Bye-bye.